Your car dealer didn't suddenly get generous. EV Leases did. If you've seen ads that look weirdly low, you're not imagining things. Today, we're breaking down why EV leasing is booming, what changed behind the scenes, and how to tell if a lease is the smarter money move for you. Here's the plan. First, the quick story of how we got here. Then we'll talk payments, incentives, insurance, depreciation, and the sneaky math that makes leases look so good right now. I'll finish with a 5-step decision checklist you can do in under 10 minutes. 1. What changed? 2 words, policy mechanics. The federal rules treat EV leases differently than purchases. When you buy, you chase the consumer clean vehicle credit with income limits, MSRP caps, and battery sourcing rules. When you lease, the finance company is technically the buyer, and they can claim a commercial clean vehicle credit, often $7,500, and pass it to you in the form of a lower monthly payment. That's why a car that doesn't qualify for a purchase credit can still have a spicy lease. No magic. Just tax code. Add in high sticker prices and still elevated loan rates, and leasing becomes the monthly payment hero for a lot of shoppers. For your notes, Treasury IRS confirmed the Commercial Clean Vehicle Credit Section 45(w) that lessors can claim and pass through. It isn't subject to retail income MSRP caps like the Consumer 30D credit. 2. The status check. Leasing really did take over. This isn't just vibes. Leasing has surged. Industry data show more than half of new EV transactions were leases by late 2024, and EVs made up nearly 1 in 5 of all new vehicle leases. By early 2025, multiple trackers show leasing holding around the 50% mark for EVs. Translation: Americans didn't just try leasing, they moved in and redecorated. For your notes, Experian and GT 50% of new EVs were leases in Q4 2024, EVs 20% of all new leases. Yahoo Finance piece highlights lease share surpassing loans and hitting wallet 50% in early 2025. 3. Why leasing wins on the monthly? Let's talk money math. For EVs, the gap between a loan payment and a lease payment isn't tiny, it's chunky. Average data show a monthly difference well north of $100, especially on non-luxury EVs. That's groceries, a phone plan, and your fancy coffee habit, all rescued by a lease. Mini math example, illustrative. Loan, $45,000 EV, 10% down, 72 months at 6.5%. 689 mo. Principal plus interest, excluding tax fees. Lease, same car, 36 months, MF equivalent, 4%, residual 56% with a $7,500 pass-through. $399, $459 mo range depending on fees and AMP. Incentives. Even if your exact numbers differ, the principle holds. Subsidies plus residuals can push leases dramatically lower up front. For your notes, Experian found the average loan versus lease gap across EVs was about $175 a month. Non-luxury EVs showed an even larger $215 gap in Q4 2024. 4. Depreciation and AMP. Tech risk. The lease safety valve EVs are upgrading like smartphones. Range gets better, charging gets faster, prices swing. That's exciting, and a bit scary if you own one and the market drops. Leasing outsources depreciation risk to the lender. If values fall faster than planned, that's the bank's headache, not your resale price. Over the past couple of years, used EV prices have been more volatile than gas cars. Rapid model cycles, shifting demand, and yes, some headline-driven fear. That's precisely the sort of uncertainty leases are built for. For your notes, multiple reports show used EVs have fallen more than ICE peers at times. 2025 data still show pressure in segments, e.g. IC cars recurrent. 5. Insurance and AMP. Total cost. The reality check. Quick myth buster. A low lease payment isn't the whole story. Insurance for EVs often runs higher. Why? Bodywork complexity, parts availability, calibration, limited repair networks, improving but not solved. So if the lease is $150 cheaper than a loan, but insurance is $60 higher, your total monthly win is $90, not $150. Still good, just honest math. Fuel and maintenance can save you money, especially if you can charge at home. Public fast charging? Pricier, and the variance is huge across networks. That's why I always say EVs love a driveway and a level 2 charger. For your notes, recent analyses peg EV insurance premiums materially higher on average. Insurify, KBB Money Geek explainers. 6. Manufacturer behavior. Lease where the deals are. Automakers that don't qualify for the purchase credit on some models, think battery sourcing rules or foreign assembly, have leaned into leasing because the finance arm can still use that $7,500 credit and pass it on. That's why you'll sometimes see eye-popping advertised payments on models that look pricey to buy. Also, when monthly payments matter more than MSRP, brands will subsidize money factors, their version of interest, or bump residuals to make leases shine. If you're deal hunting, check the brand offer pages and third-party roundups to see who's feeling generous this month. For your notes, OEM offer pages and roundups routinely show lease deals that explicitly use the lease credit pass-through. 7. Market backdrop. Prices and AMP. Rates 2 background beats. Vehicle prices and interest rates. New car average transaction prices are still high versus pre-pandemic norms, which supports the lease to lower the monthly story. Loan rates have cooled from their peaks, but they're no one's idea of cheap, so leases remain attractive for payment-sensitive buyers. For your notes, Kelley Blue Book pegs the ATP around 48.9K in June/July 2025. Experian shows average new vehicle APRs down from 2023, but still mid-6% in late 2024. 8. The decision framework. Lease versus buy for you. Lease might make sense if you want the lowest monthly payment and plan to change cars in 2 to 4 years. You're wary of depreciation or rapid tech change, range charging improving fast. Your model doesn't qualify for a purchase credit, but the lease pass-through gets you the $7,500 benefit anyway. You can keep miles within the cap, or you'll pre-buy extra miles cheaply. Buy might make sense if you drive a lot, high miles, and want to keep the car 7 to 10 years. Your model does qualify for the purchase credit and you meet income MSRP rules. You can finance at a decent rate and plan to own through depreciation. Hybrid approach. Lease now, then consider a buyout if the residual is attractive in 2-3 years and the market soften less than expected. Pro tip, start watching used values 90 to 120 days before lease end. The 10-minute lease checklist. All in monthly. Payment plus taxes plus insurance estimate plus home charging. Compare that to loan TCO, not just the monthly. 2. Fees audit. Acquisition, doc, disposition, and any dealer add-ons. Ask which are negotiable. 3. Money factor. Convert to an APR, MFX 2400 APR. If it's wild, ask why. 4. Residual. Higher residual. Lower payment. Your buyout later might be less attractive. Decide if you're okay walking away. 5. Mileage plan. Pre-buy miles if you'll exceed the cap. Cheaper now than at turn-in. 6. Where NAMP, tear, ask for the exact guide. If it's strict, consider the protection only if you're rough on cars. 7. Lease credit. Confirm the $7,500 pass-through is fully applied and not eaten by markups elsewhere. 8. Home charging. If you can't install at home, run the math on public charging. It can shrink your savings. 9. Insurance quote. Get a real quote for that model and trim. Don't guess. 10 exit options. Can you transfer the lease? Is early buyout allowed without crazy penalties? Finally, quick scenarios. Scenario A. Payment-sensitive commuter drives 9 to 12K miles year, has a driveway. Wants a modern EV with safety tech. Verdict, likely lease. Lower monthly, $7,500 pass-through, minimal resale stress. Scenario B, road warrior family drives 18-22K miles year, plans to keep 7 to 8 years. Verdict, likely buy, especially if they qualify for the purchase credit and can finance reasonably. Scenario C, tech-curious renter, no home charging. Apartment charging is unreliable, uses DC fast charging. Verdict, numbers can still work, but factor higher charging costs. If the monthly savings versus a hybrid evaporate, wait or choose a PHEV. Leasing didn't magically become better. The rules and the market made it look better. If a lease gets you into the right EV with the right monthly and zero resale drama, great. If ownership fits your life, also great. The win is picking on purpose, not by accident. If this helped, like the video so more people find it, subscribe for weekly plain English money breakdowns and drop a comment. Type lease or buy and tell me why. I'm reading every one. Want the steps, not the noise? Visit personalfinancetime.com for actionable, weekly money guides in plain English.